So we have this candlestick's low, sell side imbalance, buy side inefficiency. This candlestick's high. So there's your fair value gap. If, while we were watching this, on this candlestick I was telling you, we want to see if this portion here wants to stay open. Okay? In your notes, the bodies, obviously, if they get up into this area here, like it does here, if it leaves that fair value gap, then it's not allowed to get in the upper half. That's institutional order flow. Okay? It's very simplistic. It's visual. It's not complex. The bodies stay outside of it here. The wicks are allowed to tag into it, but we can't get into consequent encroachment there. So rolls over. Look at the bodies. The bodies are unable to come back and touch that. Only the wicks are allowed to do that. So if the wicks are allowed to do that, if we're just looking at the bodies alone, between this candlestick's high and the highest open or close in here, there's a small little separation. It's only being traversed by that one wick. This is the same thing as if we didn't have any wick at all, and that small little portion of price action would not have closed in and touched that there. It's stronger if there's absolutely no candlestick portion at all, whether wick or body. But in here, it's the same thing that's happening. Once we leave the fair value gap, come right back up in, that gives us the likelihood of anticipating further decline, trading down to the low end of that suspension block on the daily chart, which is that gray box area shaded here. All of that. So that was my target being met there. So where are the bodies on that? Zoom in here. What are the bodies doing here? This is your key level. This blue line, that's the lower quadrant of the daily suspension block. Now, if you haven't been picking up on what I'm putting down, I'm teaching you how to find the real support and resistance levels that classic technical analysis does not teach. So if you like horizontal support and resistance ideas, this is how you find them. But when you find them, when price trades to them, if the bodies of the candlesticks can't touch them, and an old man that supposedly only cherry picks with 12 laptops and finds a great deal of success only picking the right laptop out of the 12 to share his correct assumptions, always in hindsight, right? Remember all that stuff? This here, if the bodies can't touch this key level, while potentially being bearish, what makes this bearish, I said that any retracement intraday, once we leave the lower portion of this, which is obviously what we did over here, down here, okay? You used the low here and traded all the way up to that level. I told you the retracements, anything below the gray box, which is the daily suspension block's low, any retracement into this, it has to be kept at this level here or lower. Now you tell me, do the bodies touch that level? No. Is that bearish or bullish? As I teach it. As I teach it. Think. It's bearish because the bodies are not touching that level. So if this is a premium level and the bodies are not touching it, that's the signature that the algorithm lays down for smart money. This is going to go lower. Do you see how consistent my logic is? Do you see how it's constantly repeating over and over and over again? Now, think about this tonight. Before you lay down and go to sleep, how did I plug the flux capacitor in, get in my DeLorean, boom, shoot into the future, come back all during the same live stream and tell you that this level here was going to keep every bit of the retracement once we left the low end of this daily suspension block? I know. I know it's hard to believe it. I know it's hard to believe, but if it comes back up in, it's going to stop dead in its tracks right here. Now, you all know, because you've been hanging out with the old man, that I teach that the bodies cannot touch when it's bearish, just like we can't trade in the upper half of a PD array if we're bearish, and we can't trade down in the lower half when we're bullish. Do you see how that phenomenon keeps repeating as a signature? Look here. Look here. That's how Michael learned it. That's how I got it. Okay. Nobody on this planet told me that. Okay. I didn't find it in books. I didn't pay for a mentor to teach me, and you're getting it for free. Be thankful. So that is a signature telling you it's going to go lower. Now, once it comes back to this 25% level, the lower quadrant of that daily suspension block, where does it go to? What is it going to do then? What's the key levels? Back down to that low of that daily suspension block. Here you go. What does it do there? What does it do? Think. What is it doing? Well, obviously, it's got to be buying pressure. Okay, and selling pressure, ceased to have an influence over price, and then the buyers came in and overtook the sellers, and then price goes right up into some random voodoo level, event horizon, level. There you go. What happens then? Trades down outside of the low of that daily suspension block. Spends time around in it. Builds liquidity here. Dives down. Not this gap. This gap. Why this one? Because this one wasn't right before that low's taken. This candlestick pierces that low. That's why this candlestick only trades right up to here, immediate rebalance, down. Where's it trade to? Another gradient level. Reaches down. Here's the next one. Here's the next one right there. But it doesn't get there, ICT. See, it failed. What do you see? What do you see? What do you see with this level here and this level here? Split that in half. What's this?